9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching The China Show. I'm Yvonne Man with David Ingles.
Good morning. We are counting down to the open of markets in Greater China. Our top stories today: Asian stocks trading higher on strong U.S. economic data and cooling geopolitical tensions. The Bank of Japan on deck today, expected to hold rates amid worries about Prime Minister Takaichi's fiscal plan.
Alibaba, top stock to watch here in Hong Kong after U.S. shares rose. Our reports is preparing to list its AI chip-making arm.
Also ahead, details of President Trump's framework deal on Greenland, including stationing U.S. missiles, mining rights, and boosting NATO presence.
And TikTok seals a deal to create a U.S. venture with Oracle and Silver Lake, avoiding a nationwide ban. Happy Friday. It seems like if you're long these risk assets here today, and we thought we were going to start off the show with maybe some pessimism given what happened with the Intel story there and the outlook, which was a bit disappointing. The after hours, certainly we saw what happened, double-digit declines there. But then again, I think Asia's still finding some good news here to wrap up this trading week.
Yeah, we are finding that, and I think the Alibaba story might be enough to more than offset the sort of negative headwinds coming through out of Intel, although specifically on Intel, right? So we are still feeling that somewhat. I think you have a couple of stocks tied to the company. Laser Tech is down about 5.5% in Japan. But all that is to say, it looks like the Alibaba story will be more than enough. Plus, of course, we've had a little bit of everything again this week, right? Geopolitical scares, this bid across precious metals, the yen. Yen acting stable, but the JGB market doing the yen dance this week. But then risk assets at the end of the day are still doing okay.
Yep, and I think at the end of the day, what we're looking for is going to be that press briefing from Ueda-san from the BOJ here today. Yes, they're not expected to do anything, but any sort of signals of what the BOJ can do to really stabilize the JGB market and potentially the yen as well, I think would be quite telling as well. Yeah,
what's going to constitute hawkish? Lots of conversations around what that might look like later on in the show. Meanwhile, a very quick glance at the Nikkei 225 among the benchmarks in the region trading to the upside right now. Kospi is back above 5,000. You had the TAIEX index coming online, 0.6%. We're stable on U.S. futures. We're still, at the moment, we still have a full trading day left, of course, flat on the week. In fact, slightly lower last I checked on the global benchmark, so we'll see what the day looks like. The dollar, though, that's fairly clear. The dollar is on track for the worst week going back, I think, about 6 or 7 months. Let's call it June. A lot of that has to do with the strength that's come through really substantially. Number one in the Aussie dollar. Of course, we talked about the BOJ and what they say and how they say it actually coming through later today. No change, though, expected. Coming through on the actual policy rate. It comes amidst, of course, in how they're able to address, maybe even sidestep the gyrations in the bond market. One measure, that's a 30-day measure, bottom of the screens. Gold remains bid, silver coming up. You have platinum, and of course, you have oil. And yeah, we are nearing these milestones, whether that's 100 in silver, 5,000 in gold. Alibaba, big story, up 5% overnight, along with some of the other tech plays. We're up 1.6% on the Golden Dragon Index, which actually feeds very nicely into the open today, where we do have a couple of things to tell you about. We have a bond auction again. The fix will be very much in focus. Plus, of course, reiteration coming through out of the central bank that policy will be supportive and that there is room for further easing. And we'll see where that window of opportunity opens up. But yes, risk assets are bid this Friday.
Yep, so tech certainly is going to be the key focus, as we mentioned, given that Alibaba scoop from our team. So again, Gao Yuan coming up here on really what does this mean for the chip unit moving forward. Giga Devices came up with some results as well. Xiaomi, the buyback, so certainly some things to watch out for in the tech space in particular. Developers in Hong Kong, have we seen the worst of it? Is there seeing a bottom here right now? We actually have seen those stocks outperforming the most in 5 years. The Star 50 is at, 2021 highs still, so we're still watching those large cap small cap stocks this morning. The fix, we'll see if we continue to see that wider gap between the spot price and what the PBOC is setting there. There's going to be an economic survey for January coming up as well. SCMP had a pretty interesting sort of scoop about they might be lowering that range when it comes to the growth target for this year. CGB sale, wanted to tell you about as well, just given the rising demand that we saw this week on the 7-year, and there is going to be an MLF operation as well.
Yeah, watch all those things closely. Let's get more on the Alibaba story and our scoop coming through as well. The plan for the company to list its chip-making arm, T-Head, Gao Yuan, our tech reporter, is with us right now from Singapore. Good morning. Tell us about what we know so far about this potential listing and how this really goes into the overall AI strategy of the company.
Happy Friday, guys. Yes, this is big news, of course, for Alibaba, and T-Head is their chief design arm, fully owned by Alibaba, and now they are trying to put a separate IPO for the unit. We don't know much about the details yet, because this is just a initial announced plan. So basically, what they're do next is to restructure the share ownership, basically give shares to its employees before they can move on to other steps of the IPO. So for now, we don't have the valuation or venue or timing, but as you can see, there are lots of Chinese chip companies doing IPO right at this moment. So yeah, I'm not surprised that TED is trying to do something like that.
Yeah, it seems like they're joining this wave, as you say, Gao. What's next then in terms of the IPO process? What should we look out for when it comes to T-Head now?
Yeah, it's like I said, the shareholder restructure is the first step, I don't think they are start to look in banks at this moment, but yeah, they will be doing the rest the Euro steps at a later point. For now, for T-Head, its business are doing great. So it's and the overall market is very, especially in China, they are very welcoming of like the cutting edge technology companies doing IPOs either in Hong Kong or China mainland. But we don't have details about where and when T-Head will doing it. But as you know, the Chinese market is very welcoming.
Yeah, well, speaking of welcoming, the IPO market has certainly been, arguably, I would even say this is probably one of the biggest reasons why Alibaba is even entertaining this. I mean, we talked about Baidu, of course, and their chip unit, and we've seen many of them come to the market, or at least having plans to do so. Why do you think that is? Stating the obvious, perhaps, here.
Yeah, well, as you know, China and the U.S. are locked in this tech war, and for China's side, they wanted the companies with the best technologies to have this ammunition of some sort financially to fight this war. We had Capricorn IPO not long ago, and that's a who would have thought that it's a $8 billion US dollar company right now, and also CXMT, which is China's largest memory chip company. Their IPO is in the pipelines. So basically, the top tier companies that has the technologies in chip manufacturing, AI chip design, will gonna have get benefit from all this Chinese strategies. So that they can. So I think it's a good timing for them to do IPO. Yes, as you know, the IPO has been paused for many years, and now it's time. It's a good season for them to restart that.
Gao Yuan, thank you. Our tech reporter there, of course, who bringing us that scoop along with his teammate there, Debbie Wu. Really, that did move the market overnight here when it comes to ADRs. We already are seeing when it comes to the Hong Kong session, Alibaba shares indicated higher in Hong Kong. We'll have plenty more analysis later on the China show as well. Bloomberg Intelligence, as Robert Lee is going to join us. Talk us through what this means for Alibaba. Another tech story that we're following for you today that just crossed our Bloomberg just a few moments ago. TikTok and its Chinese parent ByteDance have officially established a venture to transfer parts of TikTok's U.S. business to non-Chinese owners. Let's get to our Asia tech correspondent, Annabelle Julia. She's watching overall what this deal is looking like here. What do we know so far?
Yeah, well, what we know is that TikTokers in the US can probably just breathe a sigh of relief. Of course, there's been a lot of questions marks on this or over this, and it's certainly been a many months-long saga, essentially. But the framework and the terms of the deal are really mapping or contouring what we've already heard from the Trump administration, what was announced just back a few months ago. But essentially, we've got TikTok and ByteDance that have established that JV to transfer parts of TikTok's US business to non-Chinese owners. And so as part of that deal, you're going to get essentially a newly created US entity. And we've actually already been hearing that staff within the US had already been starting to be split into these teams just in the last few weeks. So essentially just creating a bit of a firewall around what happens in the States. But in terms of who's going to be overseeing this, well, you've got the three managing investors. There's Oracle, there's Silver Lake Management as well, and then there's the Abu Dhabi-based investment company MGX. So they were already the names that we've been reporting on as well. But as we said, it really does conclude what's been a very long geopolitical saga and lots of concerns around national security in particular.
Are those concerns, does the structure we understand it in its form address the national security concerns? Like what's happened with that?
No, that's sort of one of the main criticisms or question marks out of this. There's certainly still, national security concerns that haven't really been allayed by the structure of the terms of this deal, because essentially what TikTok is doing is, and that's the Chinese ByteDance, of course, is licensing a version of the algorithm, but we still don't really understand how that algorithm works in practice. And actually there's a really great Business Week daily blog out from this from one of our reporters, Alex Levine, and she's talking about how she meets up with a friend, and essentially they realize that both of them are using TikTok but seeing very different videos on the ICE rates in particular, and a lot of those AI generated as well. And there's really no understanding of why did you get that content being fed to you, and I'm getting this content being fed to me. And that really speaks to the key question mark of social media apps in general, but tools that can essentially feed misinformation, disinformation, social dissent as well. And then that really got back to the main issue and why this all started with TikTok in the first place under the Biden administration.
Bill, thank you so much. Annabelle Jewellers, our tech correspondent, on what we know so far about how this might look like moving forward. More on the tech outlook, in fact, coming up here as investors are piling into shares of companies with AI application. The long AI trade continues, no pun intended, to trump most risk, if not all, when you look at how price action is faring at this point in time. DWS joins us to explain why they see the rally based on earnings and not speculation. We're counting down to the open of trade in Shanghai, Shenzhen, and here in Hong Kong. The final session of the week, about 18 minutes away. We're tracking shares of Alibaba indicated higher this Friday. Plenty more ahead. This is The China Show. All right, welcome back. So 0.5% is the early pricing. Alibaba should be much more than that. We'll track that, of course, and we'll get to the pre-markets in about 5 minutes' time. We should be getting the renminbi midpoint of the day now. Let me just check my terminal if I have that. And, of course, we've seen a few pips above the 7 handle. I'm not sure if Yvonne sees anything.
It is below. So that should be something that is going to go red on your terminal screens if you're watching very closely. 699.26, that is the fix from the PBOC here today. So it is strong, and I think we finally reached that point. But it's been a while since we've seen a fix below 7, Dave.
May 2023, and kind of makes it has. Well, the reason we were waiting for it because of the dollar weakness, right? And I think net, the dollar is on track for the worst week since June. So hence, here we are. And I think if I could ask our producers to bring up an intraday chart, please, of dollar China, if we could see any reaction to that so far. And we'll bring that to you in a moment. But yeah, why don't we talk about implications around the currency, the weak dollar, and of course, this risk asset rally you've seen from the start of the year. Yeah,
continue to see AI kind of head higher here. And, our next guest says when it comes to this whole tech rally, well, before I get to that, look at the reaction on dollar China. So continue to see that strength there at 695.81. But back to AI, right? Is this tech rally really more speculation right now? Is the ROI really there? Or is it really something that's due to fundamentals, right? Let's bring in Ivy Ng, is Chief APAC Investment Officer at DWS. She joins us now here in the studios. Ivy, it's great to have you here on the China Show for the first time.
Thank you for having me.
So the AI rally, should I look at it as something that's speculation, or do you think there is actually some earnings that is kind of leading to this sort of optimism now?
We think definitely the earning part is the main focus for us. And then we have seen that, particularly when you look at regionally, like on Taiwan, Korea, or even some of the China tech company, you may not see the earning immediately delivery for the China one, but for the Korea, for the Taiwan one, you continue to see the earning driver is a key focus for the company. That's why every time when the results coming up, people are watching out for the management guidance regarding their growth rates. And the big tech company in Taiwan has been continuously like surprise the market with the upside. So that's why from our point of view, it's definitely the earning driver. But having said that, we are also very cautious about like how about the valuation? Is the valuation continue support? And you bring up a very good point, right? Like what is the like return on equity? What is the ROI and all? But I guess like if you look at from a China perspective, at least from the China tech perspective, they do have some comparative advantage, like the cost is relatively lower, no matter like when you look at the labor cost, when you look at the like number of engineer to China produced, like that's much higher than other country. And then the other key thing is the electricity cost in China is also like very low. So all these things kind of supporting the overall like tech value in the market.
People keep pointing to valuations as a reason for the market to correct, but so far they've only pointed to it. We haven't seen a correction. And I wonder, people talk about this as a generational opportunity. And, companies keep saying they just can't produce enough of it, CapEx, they need to raise so much money to put the CapEx in. And I wonder, is it useful to use 1 year earnings, is my question, as a gauge of valuations, given that, who knows what this looks like in a year? We don't know, but what it looks like in 3 years is probably much, much more.
I think it's always better to look at multiple years. Like we generally, when we look at, let's say, the U.S. earning, we always say that like even till 2030, we still see a kind of like double-digit earning growth in the U.S. market. Yeah. We generally look ahead. But the thing is like, okay, market also focusing on the short term. And especially when the expectation is really high, the next 1 year earnings is kind of like the key driver. Right. Not only just the earning, actually management comment is also a key part. And what you're right, we have been saying about like valuation expensive. But you have seen that there is also some change in the market. While the AI stocks start picking up, but regionally, you look at the property names actually doing pretty well. Surprisingly, property, you can say it's more a value name than anything related to AI, right? So market has been shifting, and fund manager has also been reallocating some of the money. But for the AI one, still is a key focus. But they have been diversifying.
Is there still a need to be defensive in this market? I just take a look at what's been going on with geopolitics here, and it kind of fuels this whole debasement sort of debate of diversification away from the dollar assets to maybe precious metals, for example. Do you see still a case for that, given we've seen a massive rally in gold prices already?
We do, yes. I think it's also understandable. Of course, gold price at this level is a little bit expensive. I think everyone would agree that. But the thing is, whenever it's pulled back for 10%, let's say, for the whole geopolitical tension, calm down for a little bit, then you see maybe gold price pull back. But while we are living in the current world, actually is a rising geopolitical tension everywhere you can mention. So that's why for gold price or for gold, particularly in the portfolio, we still see its value in a multi-asset portfolio. It's very important.
Okay. You mentioned property. I'm curious about that because that started to really come alive.
Yes.
Why do you think that is? And is that simply just rotation out of the big winners? What's going on there?
I think there are two parts, right? So the key part, as I mentioned, market has been looking for some value stock. Where is the rate of change? And this is the key part, I think, is where driving the property names. If you look at Hong Kong has went for a very tough period of time, be it residential, office, retail, whatever you can name. But let's pick on the commercial sector first. When you look at particularly on the Hong Kong office, if you look at 4Q or the central rent, it's actually the first quarter-over-quarter pickup in terms of the central rent after multiple years done. So this is a positive sign we are seeing in the office on top of all the transaction we can name last year with the central office, with the Causeway Bay office. Yeah. So office was where we see the positive momentum. Retail in terms of the rents, I know that the rental version part is still kind of under pressure, but we can see that with the tourist arrival slowly picking up, we still haven't back to the heyday of 2018. Don't get me wrong, but at least probably we have seen the worst. And residential where you see stock price have been picking up. I think the key part for a lot of investor is when you look at last year, our residential price are 5%, our primary, our secondary volume all picking up by double digits. So that's where people getting positive. But don't get me wrong, I'm not saying about the earning will be stood up in the coming March. It will still be the earnings still be under stress for some of the names. Yeah. But the thing is for market, is where's the bottom. Yeah. And that is where they see the value, right? Before the whole valley coming, a lot of property name, particularly Hong Kong property name, was actually trading as a kind of -1 standard deviation discount to our NAV. Of course, the price has picked up, valuation picked up, but I wouldn't see that it's like super expensive now, probably more at a fair value kind of range right now for the Hong Kong public name.
Has the environment, funding conditions specifically, improved enough that some of the distressed names have been pulled so far away from the edge that they're no longer distressed? I'll just mention New World, for example. We don't have to talk about New World, but bonds, some of the bonds are up 200%. It's been in the news this week. And have things shifted enough that, the solvency issue should not be an issue anymore?
Okay, without touching a specific name, but overall market, we can see HIBOR was moving last year. Of course, in second half, itching a little bit like higher compared with like the low point we see in a year. But overall, when you look at full year basis, it's still pretty healthy and relatively low level. So you have seen that in the like results or in the coming result for the developer or landlord, the interest cost pressure will be less. So that's why I would say the funding environment is getting more favorable. I would say there is still some problem, but as I mentioned about for the fundamental, it's the same thing. Like for the worst time, probably has passed.
Ivy, thank you.
Yeah. Thank you very much.
Have a happy Friday. Have a good weekend.
You too. Thank you.
Ivy Ng there, Chief Investment Officer, APAC at DWS. Alibaba out of the gates, 4%, 5% move overnight. So unsurprising given, of course, this our Bloomberg reporting here on this potential listing of its chip unit.
T-head heading to go public. So that certainly is going to be one thing that could propel the whole tech ecosystem here today. We're already seeing that here in Asia. Plenty more ahead. This is Bloomberg.
All right, welcome back. Quadruple B, that's the theme today. Alibaba, and then we'll get to Labubu in a moment here. Up 4% here on, our reporting that it's looking to list its T-head chip-making unit at some point.
I was wondering, quadruple B, what you meant by that.
Yeah.
Baba and Boo-Boos. Okay, I get it now. Pop Mart, that's how we're talking about it. Okay, there's a lot of anticipation that there's going to be this big interview that the CEO has done with Xinhua that's coming out, I believe, 12 p.m. today. So the market's certainly getting really interested in what he's going to say here. But yes, the stock is up to 4%. It's already been up to 15% this week already. The best week we've seen in about a year and a half or so.
Yep, August 2024. All that is feeding into the open today. We're poised to open higher this Friday. This is the China Show. Good morning. You guys might have caught a whiff of...
The things we talk about off air.
Yeah, somewhat of a snicker, and we will...
No.
Anyway, we'll talk about it later.
Our director says it was not broadcasted live. But we were discussing what T-head means. And I looked it up according to AI Google. It's a honey badger. 平头哥.
Sounds non-aggressive, though.
But no, it's enough to kind of fuel these markets, right? We saw, overnight, the stock basically saw a bit of a there. Now we're seeing a little bit of pop there when it comes to Alibaba. That certainly is giving some good vibes as we wrap up what has been a pretty turbulent week when it comes to Davos, the Greenland situation, which I think we're all kind of resting a little bit more and better now about that. The JGB market has also stabilized, but then again, BOJ is up next. So certainly that's the next sort of event risk to watch out for across these markets. But at least for now, that Alibaba story is helping to propel this onshore market a little bit higher here today, as well as we'll see how Hong Kong does, of course. We're a fifth of a percent higher here this morning. We talked about some of the small caps, the gauges like Star 50 that are at basically 5 to 6 year highs. And then you take a look at what's been going on across some of these tech names, right? So you're still seeing the likes of Capricorn Tech lower by 0.7% here today. But we're watching very closely what happens in Hong Kong. So obviously Alibaba is the one to watch. We talked about how the pre-market, we're already seeing decent gains there. We're talking about 3.5% or higher here right now. So according to our team, Alibaba reportedly is planning an IPO for T-head. This is the AI chip-making unit. So following the likes of Baidu, And of course, many other Chinese tech companies of late here. So that's helping. Baidu, interesting enough, is heading lower, right, in reaction possibly there, given that there might be more competition. Tencent, not doing much there. Meituan also just slightly higher. But Xiaomi is also up close to about 1.8% or so. But there is a planned buyback there. So that's possibly why it is leading the charge. Dollar China is interesting, right? First time since 2023, we have seen a fix from the PBOC sub 7. So continue to follow that dollar's weakness, of course, and the strength in the currency here at 695.65. So continue to see dollar China heading lower this morning. HS Tech seems to be driving the charge for the Hang Seng. We're up close to 1% right now.
Yeah, you really feel the effects in the equity market. I'll try and tie the equity market rally to the strength in the currency, and it's somewhat unlocked maybe some further gains, apart from obviously the tech tailwinds we're getting from the likes of Baba and Xiaomi. Pop Mart's also, as we were just pointing out there, that's going to come up on your screens ahead of this interview.
Yeah.
That's coming out, I believe, do we have timing on that? I think
12 p.m. Friday, so in
Noon.
about 2.5 hours or so. So if you're watching BOJ, you also might want to watch this interview coming up as well. According to Tencent Video, which really touted on their social media account that this interview with Wang Ning, the CEO, with Xinhua, is coming out. It's getting the market excited. Maybe, remember the last time there was that presser and he took out the little mini Labubu? I wonder what he might take out of his pocket
It
today.
can't get any smaller.
It could.
Otherwise, it's
It could be like a minuscule Labubu. Who knows?
2 nanometer one.
Let's bring it back to chips, though. That seems to be the big thing today.
That was the segue.
Yeah.
So we're looking at this chip potential listing of the chip unit of Alibaba. That's T-Heads. Bloomberg Intelligence says the potential spinoff will have a limited earnings impact due to some structural headwinds, not specifically to do with the chip business, but broadly speaking, when you look at the company. Robert Leeswood is here to underscore the thesis and spell that out for us.
Yes, that's right. I think the earnings outlook for Alibaba as a whole remains dominated by e-commerce. And as we know, there are strong headwinds at the moment. There's a price war within mainstream e-commerce and particularly within the food delivery service. And that's why we've seen quite significant earnings downgrades for Alibaba and its e-commerce peers. So obviously the headlines today, as you said, are dominated by the potential spin-off on IPO of T-Head, whose Chinese name, as you said, I think stands for honey badger, which apparently is one of the most aggressive animals. It's one of these things, if you look on YouTube, because I spend a lot of time looking at random YouTube videos in my spare time, it's one of those animals you don't want to meet down a dark alley. It's incredibly aggressive. So whether that defines their strategy or relates to it was completely random, or just a CEO like the look, I don't know. I digress. Back to the business. They've been in business, I believe, since about 2018 or 19. They have a fairly limited range of chips at the moment, which are largely to supply in Alibaba's internal use, so both for mainstream servers and cloud business, computing, and obviously AI. So the spin-off, in a way, doesn't impact their strategy, T-Head's strategy overall. It continues. In theory, one motivation to IPO is obviously to gain access to external funding to help build your new factory or whatever. So first of all, they don't really need the capex or the money for that because they follow what's called a fabless business model. So they're outsourced to production, much like NVIDIA. And also, Alibaba is a business which is very, very cash rich. So therefore, I think the prime motivation for this is a value realization, which is why the stock has reacted quite positively. So they've got a pocket of intellectual property, a little hidden gem in there, which investors can potentially get their hand on, and they get a payback on the back of that. I think it's as simple as that. It will have no impact on their capex plans. Alibaba will continue to spend 50 or so billion over the next 3 years. It's a value realization.
Just join the rest. That's
and
doing
good
the
for brokers, good for the Hong Kong market. That's great.
You forgot the bankers.
Oh yeah, that's true. Big
Robert,
fat bonuses all around.
But I mean, it's almost like every few days I see a headline about some chip unit that's going to, AI chip unit that's going to go public.
It's
in
quite
China.
the fashion.
How should I look at, the Alibaba one versus Baidu versus all the other ones that are coming out or have already come out?
Okay, well, a lot of these big tech platforms have their own in-house chip division to again, because we've got huge, demand is outstripping supply to a significant degree at the moment. So In order to largely meet internal demands, they started this business 6-7 years ago. But yes, given the ebullience in the Hong Kong market at the moment, given a strong appetite for new listings and IPOs, there's a window of opportunity, encouraged no doubt by brokers and bankers to spin these things off. But in terms of what it means for the industry, no big impact because they're actually capex-light businesses. And in the long run, this ties into China's quest for technology self-sufficiency, particularly focused on semiconductors. So, which I think is a very interesting and exciting trend.
All right, Robert. Thank you, Robert Lee there, Bloomberg Intelligence senior analyst there on what to expect when it comes to Alibaba and T-Head moving forward. We got to switch gears from the whole AI trade to talk about property, right? We were just talking to Ivy Ng from DWS about how she started to see signs that possibly a bottom is forming. And you started to see that in some of the outperformance of some of these property stocks, right? The Hang Seng Property Index has actually outperformed the Hang Seng the last few days or so.
Yeah, I think as things stand, this should be the biggest monthly outperformance, I think going back several years. I think going back about 5 years or so. And I think Ivy's point earlier was that, it's really the change, the rate in the delta, and I think she's seen a very quick bounce from the bottom as far as I think commercial and office rents data is concerned, is what Ivy was citing from December month and month. So something to watch, given, of course, all the news flow, which does include, of course, we talked at length about this new world this week. You had a rally in the stock, an even bigger rally in some of the company's bonds. That's despite, of course, the broader conversations around the company facing fresh turmoil, this $2.6 billion mall near the airport, Hong Kong airport specifically, and you have tenants terminating their leases there. Shirley Zhao is with us here on set, our conglomerates reporter, to tell us and remind us about what is the latest with the mall.
Right. So the mall right now is still standing largely empty, despite, the airport authority last year told us that they aim to open the mall by phases starting from mid-year this year. And what we've learned is that a series of tenants who have signed up leases with the mall have pulled out, including Chow Tai Fook Jewelry, which is a unit under New World's controlling shareholder, the billionaire Zhang family. And other brands that have pulled out include Japanese brand Uniqlo, sportswear brand Y3, and local jewelry brand Luk Fook.
So what's sort of what you're hearing on what New World might be planning on doing with this particular asset now? Is it they just want to sell it at a loss? I mean, what's their perspective right now?
Right. So there are a range of options. New World is looking to sell the project, and it's likely that they may have to sell it at a loss. And at the same time, they're also talking to Hong Kong's airport authority to sort of forge a deal on the future of this mall. And one of the options that they're looking at is for the airport authority to waive a guaranteed rent that New World is expected to be paying starting from 2028, which amounts to 1.8 billion Hong Kong dollars a year. And that payment will last until 2066. So one option is that the airport authority may waive that payment, but at the same time in exchange for a control of the project. And what we learned is that the airport authority has already approached some major developers in town to potentially take over the project.
Okay, Shirley, thank you. Shirley Zhao there with, of course, that Sloop, a Bloomberg Conglomerates reporter. And some other corporate news this morning, TikTok and its Chinese parent ByteDance have closed a long-awaited deal to transfer parts of its U.S. operations to U.S. investors. Now, the social media company has officially established a U.S. entity with 3 managing investors. That's Oracle, Silver Lake, and Abu Dhabi-based MGX. This move secures the app's future in the U.S. after a years-long geopolitical and regulatory tug-of-war. China's Geely has set a goal to increase annual sales by more than 50% by 2030 and become one of the world's top 5 car makers. The group spans brands from Zeekr EVs to Volvo and even makes London's iconic black cabs. The CEO, Andy An, says Geely wants to sell 6.5 million units by 2030. That's up from the 4.1 million it delivered last year, and that would see revenue top $140 billion. A U.S. court has approved the takeover of bankrupt Roomba maker iRobot by its main Chinese supplier. But creditors and the Chinese buyer Pacia continue to engage with U.S. regulators to finalize the deal. The U.S. government filed a statement this week noting that certain aspects of the transaction may be subject to national security review.
All right, we're about 11 minutes into the cash market session. Yet another massive pop in shares of Pop Mart. So the story going into today was the buyback story. And then today, of course, ahead of that interview with the CEO from Xinhua News, which should be airing in about just over 2 hours from now. Watch it very closely. We are on track for the best week now since 2022 on shares. As you can see, 24%. Also to the upside, the Chinese currency. For the first time since 2023, the fixing sub 7. And that's a reaction across the Chinese currency. Plenty more ahead. This is Bloomberg.
It looks like we have the concept of it. It gets everything we wanted, including especially real national security.
President Trump was the one who reinvigorated NATO at the summit in The Hague with the famous 5%. I think we can be thankful for the fact that he again has been able to take leadership on this issue. How can we collectively protect the Arctic?
On Arctic sovereignty, we stand firmly with Greenland and Denmark and fully support their unique right to determine Greenland's future.
The process of getting to that agreement has clearly damaged trust amongst allies, long-standing allies with deep friendship and partnership. That's been the very unsettling thing about the last few days.
I think that what's going on is really a change of the world order.
Every country is entitled to defend its legitimate rights and interests.
We consider the people of the United States not just our allies, but our friends.
Yep, world leaders there in Davos weighing in on, of course, Greenland, Arctic security, and shifting alliances as well. Let's bring in now our chief Asia correspondent, Rosalind Matheson, who's been tracking all things that's been going on in Davos there. We're getting some, at least, details of this Greenland framework. What does it look like at this point?
Well, it seems like it will include quite an expanded US military presence on Greenland, possibly being able to station US missiles on Greenland. Of course, the defence treaty back from 1951 allows the US already to station plenty of troops on Greenland, but it has to consult first with Denmark and Greenland before expanding its bases. So there's a fundamental basis already for this arrangement, but it does seem as though from our own reporting, the US is seeking to do that in a very unfettered way, which means to not have to consult with Greenland or Denmark before they build up military bases there. And, that's kind of in tune with what Donald Trump has been saying about allowing the US to do really whatever it wants when it comes to Greenland. So there's that aspect of it, the military part of it. It also does seem to involve an aspect of mineral rights. Of course, Donald Trump talks a lot about critical minerals and rare earths. Greenland has critical minerals, and it seems to be about getting rights to that and therefore stymieing Chinese companies from getting their hands on Greenland's critical minerals. So two aspects of that, possibly a permanent NATO presence as well on Greenland, in the sense that the NATO members want to still be involved. But some of the fine print is still being worked out. There are noises from Greenland and Denmark that they want to make sure they're a voice in the room. And so far, some of these conversations seem to be happening directly between the US and the NATO Secretary General, Mark Rutte. And so they're saying, hang about, we actually need to be part of these conversations. Donald Trump's talking about a 2-week time frame to get this done. His timeframes can be a bit slippery, as we know, or he can change his mind. But that's right now he's saying he expects to have a proper framework within about 2 weeks.
Yeah, speaking of how quickly things can change, maybe just to muddy the outlook even further, I think the U.S. president just posted something on Truth Social to the effect that maybe they should put NATO to the test, invoking Article 5 for the U.S. southern border. Again, just to, I guess, highlight still the differences that remain there. And just really on that point there, Roz, is there a risk, and people talk about this wholesale dumping of U.S. assets by Europe as perhaps the risk market should be watching. Is it that, or are there bigger risks that have been, I guess, off the table for now?
Well, it's interesting. Every time there's a dispute with the US, with a country, this comes up, this idea of selling US assets. I mean, you hear that in Asia a lot too, right? With countries like China. And there's been talk, does Europe use its leverage? It holds collectively about 40% of the foreign holdings of US treasuries, but a lot of that's in private funds. Some of it's in state funds, but a lot of it's in private hands, and governments can't really say you need to now sell your holdings of US assets. Those funds will act probably, on their own calculations around market risk. For example, perhaps they do want to diversify, but it doesn't necessarily signal, that Europe's abandoning the US. And even though there's been so much head scratching about the past week in Europe, and a lot of leaders, frankly, their heads are probably spinning about the way that this relationship is shifting so quickly with the US. But there is that refrain under all of it, and that is that you still need to have some kind of relationship with the US. That includes on the trade front. Maybe we get that trade deal ratified now at some point, that you need to be a voice in the room with Donald Trump, including on security. And so there is a sense of just maybe there's some rebalancing in the relationship in the minds of leaders as well. They need to diversify, they need to find new friends around the world, but you can't really pull away from the US in entirety. And so for Europe, it's going to be that balance of trying to work out how to have that relationship with the US, but acknowledging that it's evolving all the time.
Roz, thank you. Rosalind Matheson there, our Chief Asia Correspondent. Really just the clarity at which we now understand, of course, what's really been a very complex and dynamic conversation in Europe, and hence perhaps why, compared to this time last week, silver is, there we go, a few hours away, given the rate of change, from $100. Who would have thought? 40% year to date. That's not normal.
Yeah.
Nor are we in normal times, I guess.
I mean, it's crazy. I mean, the silver market was interesting, right? There's a bit of a China story in there, right? There was a bit of concerns about back in October that there was this document that talked about maybe these export licenses might be changing, that maybe there might be tightening some of these curbs and whatnot. But then again, there was a great line that came out yesterday about how they shipped some 5,100 tons of silver last year. So, are those fears overblown in some ways? But that has been a reason why silver prices have continued to head up. And people really kind of front-loading it for the moment.
I think the highest volume of exports in at least 16 years.
Yeah. But Goldman still just recently lifted their gold forecast, right? Year-end gold price now at $5,400 an ounce for gold. So it seems like when it comes to gold, there is still reason to buy. That's what we hear from a lot of guests this week as well, despite the fact that, geopolitical tensions are actually now easing a little bit. Let's bring in Michelle Leung. She's head of Asia Metals and Mining for Bloomberg Intelligence. She joins us now on set. So, tell us a bit more about this crazy metals rally we've seen. What stood out to you?
Yeah, definitely over the past year is one of the strongest rally across the whole metal space. And then if we look at the outperformer, clearly was silver, as you mentioned. It tripled, actually. And now it's touching a record high of 100 per ounce. And then the second one is actually platinum. Platinum also up by 160% year on year over the last year. And then as gold, tin, they all up by 70 to 75%. And then, relatively laggard is the copper and aluminum, but still they were up by 35% to 20%. Right. So it's pretty crazy. And looking into 2026, actually, our analyst, our team actually expecting the silver to consolidate at a more realistic level at around 85 US dollar per ounce. Despite all the very tight demand and supply balance still going on, we see that actually the silver to gold ratio it has come down to 60 versus the last year's average around 87. So it has come down a lot already. For the gold price, we still expect it to hold high level given the geopolitical risk and the U.S. policy uncertainties. We are expecting another at least 29% run this year on average to 4,400.
If I want to express this in the equity market in terms of stocks to buy, companies that will benefit from an earnings perspective, what stand out to you here?
Chipmaking Gold International, which obviously the IPO draw a lot of attention. This company is a pure gold play. And the reason why we think it stands out because it's earnings definitely very strong. After expecting a 200% rise last year, we're looking for another doubling this year. And also, this company has a very good, strong track record of acquisition at very low cost. And talking about its output growth is also likely to outpace its peers as well. So definitely making it a very good play or leverage on the gold rally.
Okay, Michelle, thank you so much. Michelle Leung out of Bloomberg Intelligence there. She was pointing out, there we go, Zijin Gold up about 5%. All right, we'll just take a short break and we will see you on the other side of it.
Speaking of gold, let's take a look at Laopu Gold, or Heritage Gold, as they like to say it there. But there you go, 7% pop when it comes to the shares here. Daiwa just raising their price target. They're talking about, look, the recent price movement we've seen in the stock is still lagging behind what the gold rally has done. So maybe some catch up there, Dave.
Yeah, well, something to watch. Benchmarks looking like this. And again, we're back here, right? It seems like we talk about PopMart and Laopu Gold. We're back to those programming days, right? New consumption plays. We're up across these markets 0.7%, 27,000. So we've yet to actually break through this recent range in the Hang Seng Index. Well, certainly we'll have more on this in a moment. This is the China Show.
Welcome back to the China Show. Here's a look at the HSI half hour into this session. And you got to thank Alibaba for that, really lifting the gauge here, given what we saw, the news of course, that they reportedly, according to our sources, are going to be spinning off that AI chip unit. So certainly joining the fray of a lot of offerings out there that are about to come as well. That's enough to kind of lift up HS Tech here this morning and certainly kind of brush off some of the Intel concerns that we saw after hours there about talking about supply shortages and the like. But certainly that outlook was a bit more dim. But then again, rest of Asia sitting quite pretty here today on this Friday morning, Dave.
Yeah, we are, and we'll see whether or not the BOJ does represent a risk to the rally and what would constitute a hawkish tone, right, coming through out of the BOJ. So we'll likely get a decision over the next 90 minutes or so. So we'll stay tuned for that, of course. We're looking at the rest of the region, as Yvonne is pointing out, right? This up arrow story. We're still flat-ish on the week. In fact, negative on some global benchmarks in terms of equity markets, but we are ending the week, as you can see, on decent footing given just the ups and downs and reversals in policy and messaging on the geopolitical front. What has been consistent, maybe because of that, is this bid that's really strong at this point in time as it pertains to precious metals, right? So silver is extremely close to $100 an ounce. We were just above 99 earlier on, and we're just a good 30 minutes away if you think about the rate of change there from taking out. That 5,000, of course, is the gold play. And we also did, I think to some extent, did get some assistance in the form of a stronger Chinese currency.
Yeah, I mean that first, strongest fix sub-7 since 2023, right? That's why you did see a bit of that dip there when it comes to dollar China. Certainly going to be a very interesting one here because the timing of it is quite interesting, right? I think most thought maybe they weren't going to do it until maybe after Chinese New Year, but this seems to be a bit earlier than what some traders were expecting here as well. So is there a sign of more tolerance for a stronger renminbi and the like? Let's bring in Mark Cranfield. He joins us live now on, of course, the market action. Plenty to talk about. Maybe let's talk about the currency first, Mark, on what we're hearing. What does it signal to you, a sub-7 fix from the PBOC today?
Yeah, it's very significant, especially in the context of a slightly weaker dollar overnight as well. And I think what you can read into that is the PBOC can see that the world is gradually shifting away from the US dollar. It's not dramatic, it's going to take time, but you can see the move in the euro, the Aussie. These currencies are gaining a lot of traction. And the PBOC is very comfortable with the view that it wants the yuan to be part of that. If money's moving away from the United States, it wants to make sure that the yuan captures a decent chunk of that and that it's ready to do so. So as you say, they lowered the fixing below 7 today when a lot of people were assuming they would hold on until after the Lunar New Year holiday at least. So they've really brought that forward. It shows that they're going to be competitive. They already, exports are doing well in China anyway. They can absorb a stronger currency, and they want to make sure that as assets move around the world, that China grabs its fair share of whatever money is shifting to other parts of the world. So it's a very big sign of confidence in their currency, in their markets, and traders will be very aware of that. There's one report on Bloomberg today suggesting that China might be seeking up to 10% of global currency reserves, which will be a big jump from where we are today. So all in all, it's a very much a positive signal, not just for the Chinese yuan, but for Chinese assets in general.
Mark, how are you looking at this planned listing, reported planned listing of Alibaba's chip unit? How does that further this exuberance, excitement over AI? And certainly helping today. I'm just wondering how that fits into the broader scheme of things.
It certainly helps to fuel the whole AI phobia, FOMO, whatever you want to call it. There's a bubble forming in all things AI related. In terms of individual companies, everybody wants to capture these extraordinary valuations. At the end of the day, every company is responsible to its shareholders to squeeze as much money as it can out of the market to distribute back to its shareholders. Alibaba is no different from anybody else in that point of view. If it sees an opportunity to cash in on excessive valuations in the market, it should do so for the benefit of its shareholders. And that is exactly what it might be able to do if it can bring off this IPO. Because don't forget, waiting in the wings, you've got potentially two huge IPOs in the United States. You've got Anthropic and you've got OpenAI, who would probably love to bring their companies to IPO at the right time to get in touch with these amazing. If you look at OpenAI is valued at something like 800 billion, maybe it's looking to go to $1 trillion. That's extraordinary for a company that so far is hardly making any money at all. This kind of bubble will pop, and it won't be too far away when it does. So everybody now would like to rush in, capture as much valuation as they can before the party ends.
All right, Mark, I'm wondering if the party has ended when it comes to shorting JGBs. Because we were just hearing from the finance minister as well. She says the tax cut plan not fully grasped by foreign investors. Is there anything the BOJ is going to do today, do you think, to reassure investors out there, maybe stabilize the JGB market and even dollar yen?
If we get a surprise today, it will be in the press conference, and Governor Ueda will hint that the Bank of Japan is reconsidering its plan to reduce bond purchases. So it currently is on schedule over the next 2 years to keep on reducing the number of JGBs it buys. It already owns a very large part of the market. It's been criticized from time to time for owning too many, and Governor Ueda has done a good job of trying to reduce that. And he still wants to do more of it. But the dislocation, the dysfunction at the long end of the JGB market is very disconcerting to investors and to the central bank. At the end of the day, central banks are responsible for having orderly bond markets, orderly currency markets. It is their job to do so. What he's been seeing happen in the last couple of weeks will really be sending shockwaves through the Bank of Japan. One way he could help the market would be to say, okay, we're going to revise, at least temporarily, our plan to reduce purchases of JGBs. That would be a positive signal, and it would certainly help to stabilize the market. Whether he does or not, whether he's brave enough to do it ahead of a Japanese election, of course, that's for people to discuss. But if there's going to be a surprise today, I would suggest that's where it will be, is that Ueda will say something positive to help the long end of the JGB market.
Mark, fantastic. Mark Cranfield in Singapore. For us, just a quick glance at the big movers early on, about 37 minutes into the cash market session here in Hong Kong. Okay, right. So watch this.
It's a harsh zoom in.
Yeah. In case you're missing it, this is what you're missing. Pop Marts, Lau Pu Gold, of course, on the gold play. And of course, Xiaomi on the back of the buyback story on the broker, and of course, Baba, of course.
It's interesting, right? The Lapu Gold, right? We haven't talked about them for a while. I don't know if it's because of what we're hearing about Pop Mart in this interview that's coming up. Maybe the whole new consumption plays is just catching a bid here today, but also maybe with the gold price, right? I mean, how much more can these gold miners rally? Maybe there's a bit more of a catch-up here when it comes to some of these sort of Laopu Gold names as well, or some of the retails out there. So certainly, is this more of a rotation out of that gold into more other gold plays? All right, that's one question to ask, of course. Still ahead on the China Show, though, we're talking a little bit more about CCB, their Asia wealth business, and find out how they're working to capture inflows from mainland customers. The Deputy Chief Executive, Annie Chen, joins us next. This is Bloomberg.
People are looking safe havens to park their funds, and at the same time giving them good returns. They are looking for policy consistency and predictability.
That was Paul Chan, the Hong Kong Financial Secretary, of course, speaking with us earlier this week out of Davos about Hong Kong really as this something that they've really prioritized, bolstering the status as a wealth hub, the haven for investors amid just this geopolitical uncertainty. And certainly when you look at the numbers, it certainly supports that narrative. In fact, one specific segment that has been booming is, to the point we were just making, wealth management, right? Spurred by these flows coming through across, from the border, across, from the mainland, this affluence segment of the customer base here.
Yeah, let's get more now on this with our next guest. Annie Chen is Deputy Chief Executive at China Construction Bank Asia and joins us here in the studio. Annie, it's great to have you on the program. You have a very unique position being a subsidiary of a Chinese bank here. And we just talked about, right, the amount of flows from the mainland coming for people starting to set up account and whatnot. How are you capturing that sort of inflow now?
Yeah, hi, Yvonne. In terms of wealth management, the business in Hong Kong, actually last year is growing very fast. And for us, we are also very encouraged by the growth in the wealth management income with a 46% year-on-year growth. And behind that, a key driver is around the Chinese mainland customers coming to Hong Kong looking for offshore investment solutions. And with that, in particular, opening account, and we see a very strong flows. Into that, what we did is we launched an 8-minute account opening service for our customers.
8 minutes?
Yeah. What they do is...
That's as long as this interview is going to be.
That's how quick it is.
Yeah.
I think basically because a key pain points for mainland investors when they come to Hong Kong looking for offshore investment, the first thing they have to do is to open a bank account.
Right.
And that has been our challenge previously as well, and then queuing as well. And what we did is we put that solutions into the mobile banking app. And with that, our customers, when they come to Hong Kong, they can use our mobile banking app to input all the information and authentication, and it will be complete in 8 minutes. And after that, we also deck on a lot of different wealth management products onto the mobile banking app, and they can do it just digitally.
What are I've always been curious about this. We've seen a lot of flows coming here, to your point. What are some of the most popular products that mainland, the affluent class are want to get here in the city,
that's actually a lot of questions. A lot of people ask me that questions. I would say it really a very diverse needs, because probably I would the customers can categorize probably into two groups.
Okay.
One group being the high net worth customers. So their demand for products, they are very knowledgeable. Okay. So they would look for more multi-asset class. They need some far more complex, different investment tools. The other group is being the mass affluent mainland Chinese investor.
Okay.
And most of them, they have very limited offshore investment experience. And to that, the Wealth Management Connect schemes is a very good starting point for them to invest in Hong Kong, invest in low and medium risk product. Like in the past years, probably time deposit is very popular, but as the interest rate is coming down, we are seeing the flows going to funds as well in the Wealth Management Connect schemes.
Your client numbers have grown substantially. I think you nearly doubled, right? 97%. Interesting enough, though, your AUM has only grown about 25%. Can you tell us what's going on there, and how do you address that gap?
Yeah, that's the number that we doubled is on our private banking customers, and then our AUM grown by 25%. And the reason is that because a lot of them are new customers. So they opened the account last year, and then they are looking into, some of them they have already offshore money, probably in other area, and then we are sharing our house views and products, and that's why. But I would think that since they opened an account with us last year, I would think that this year we'll see a more decent growth and strong growth in our AUMs as well.
Do you have a specific target on AUM growth this year?
To our targets, at least 50% growth for the private banking side. Because the momentum and leveraging on our parent banks in terms of the demand and the flows that we are seeing, very confident in terms of the asset management.
I was actually going to ask you that, because what sets you apart, to your point, right? You're China Construction Bank. What is the unique selling point? Because there's plenty of players and competitors here in Hong Kong, which is, I think, a good problem to have for the industry. But how do you grab the AUM, as you point out, sitting elsewhere?
Yeah. First of all, Hong Kong, I would say the wealth management market has wide and depth as well. And for us, what we are doing is, first of all, leveraging on our parent banks in terms of our operations and efficiencies, and also technology development. Coming back to our strategic priority, one of that is scaling through digitization. So this is one. And the other is a lot of the experience, like the use of technology, AI, modeling. There are a lot of best practice that we can leverage from our parents' bank. And last but not the least is the customers. So through the discussions and also meeting customers in our mainland who need offshore investment solutions, then our Hong Kong arms comes into play.
How do you plan on expanding the wealth business then? Do you plan on hiring more wealth managers, private bankers?
Yeah, definitely we have to. Seeing the growth in the customer base at the speed. In the coming 1-2 years, roughly, we are planning to hire roughly hundreds of frontline, which include private bankers. And we also have branches in Hong Kong as well.
100 or hundreds?
100.
100, okay.
Yeah.
To make sure.
Yeah. and including branches and also servicing staff. But to that point, I think apart from having RMs, the other observations is a Chinese mainland investor, they demand speed. So that's why actually they would like everything to do it on a mobile banking app. And as a result, we also double down on our investments in mobile banking. For example, in the past, we have some principal protected products that can only be distributed at the branch network.
Okay.
And then we put them on mobile, and the investment size is only 1/10. And then we can do it 24 hours a day. I think that's an even customer going back to mainland, they can still manage their finance through our mobile banking. I think this is what we think even more important as we look into scaling the business.
That's a very fine balance, because you have to, I guess, in some ways, right, make everything available online, but in some ways you have to also protect against online fraud and all these sort of things. So how are you approaching that balance between convenience and
also AI too? That's really kind of disruptive.
I think you are head on in asking a very critical questions in terms of like risk mitigation, because I think first of all. For RMs, I think for high net worth customers, we still maintain a very high level of specialists in serving them. But in terms of like online and digitization, we have, for example, like fraud detection, limit control, and then we have a team to look into that actually on a daily basis and managing that. And it is our day-to-day job, and you have actually rightly highlighted that very critical points.
We have one more question. I want to ask you about Hong Kong. The property market seems to show signs of recovery. What are your clients' demands now, right now? Do they see that, or do you see that this property market is bottoming out now? And what does it tell you about what the bank's commercial real estate exposure should be?
What we hear from our clients, I do hear clients now, for example, looking into the property. For example, in Hong Kong, we have different talent schemes. In the past, probably they rent, and probably I do hear clients, they may be looking for it, and what we are doing right now is putting up more research it really depends on their circumstances and how long they're going to stay here, and then more research and analysis. But we do see more interest and questions.
Okay, Annie, let's do this again soon. Thank you so much for coming here.
Thank you.
And Annie Chen there, Deputy Chief Executive at China Construction Bank Asia, just on the status really of the business and some of their targets going into 2026. Right, if you're one of our Bloomberg clients, you could rewatch that specific interview we just did with Annie, or you can watch others, of course, via our interactive TV function. Bottom of your screens, TV Go on your Bloomberg terminals. Plenty more ahead. This is The China Show.
It seems that every day we're reminded that we live in an era of great power rivalry, that the rules-based order is fading, that the strong can do what they can and the weak must suffer what they must. And this aphorism of Thucydides is presented as inevitable, as the natural logic of international relations reasserting itself.
That was Mark Carney there, the Canadian Prime Minister, speaking at Davos this week. I think his words really quite resonated amongst global viewers out there. I think it went viral at some point here because it seems like in many ways he warned of this authoritarian rise that we're seeing here. Also talking about Canada doesn't live because of the U.S. I mean, it was quite harsh words, I think, coming through. But I think it was interesting what Ian Bremmer was writing about, too, about what we really saw at Davos here. Wasn't really about Trump's speech, but something else that we saw. Yeah, it was really this is a forum where I think isn't the message something like in the spirit of dialogue. Yeah. And this is where people come to meet. This is where they network, and most times, very few stick their neck out with a very strong message, right? But it's addressing the changes on the ground, and I think what Ian Bremmer said, it's nothing political. It just seems like U.S. allies can no longer rely on the U.S. in the same way, and I think that was the same breath that Mark Carney was bringing up as well. That this is a change that it's a massive change, and we need to live with this properly. Yeah, a bit of a reality check, really. Right. But then again, there is some frameworks of some sort of Greenland deal, which is a good thing, of course. And we avoided, of course, a big crisis in the transatlantic relations. So at least there was that, some diplomacy that did go through. Still details are mum about what is going to be in this framework deal, of course. But yes, it's interesting, right? Howard Lutnick, the U.S. Commerce Secretary, did dismiss the recent strengthening of Canada's trade relations with China as, quote, political noise. Lutnick also told Prime Minister Carney's tilt, or told us, that Carney's tilt towards China could become an issue in talks this year over revamping the North American Trade Accord.
I think what that is political marketing, right? The Canadians have the second best deal in the whole wide world. If they continue this path, right, which is a political path of a certain thing, I'm going to go fly to China, I'm going to open up my markets to China, I'm going to take Chinese electric cars and do all sorts of this stuff, then when USMCA gets renegotiated this year, sort of like towards the end of the summer, right in the middle of the summer, do you think the President of the United States is going to say, you should keep having the second best deal in the world? I mean, you guys are such great friends. I mean, they are playing with a set of rules that they haven't really thought
I can hear it in your voice. You're excited about negotiating this, aren't you, later this year?
Well, they've sort of given a sort of a roadmap of saying, so I guess we should change the whole deal. Right? You want to be like the rest of the world. You don't want to be this favored neighbor because you've taken it so for granted that you're willing to come to Davos and say there's two hegemonic powers in the world and we're going to decide which one we're going to work with. Really? You're going to either work with the United States of America, where 75% of your economy is totally tied to it, or China? Why would you say that? I think it's political. I think if we take it correctly, we should look at it as just political noise coming out of a prime minister, and maybe this is working for his election, right? Because I don't think it can be real, because if you took out the math of Canada's economy and it's doing business with the United States of America's $30 trillion economy, There's no such thing as changing what they have today. No one would vote for changing what they had today. Now, maybe they're marketing it well, but they're just for their politics.
Howard Lutnick there speaking with, of course, Bloomberg surveillance in Davos as well. Market check here right now. Still seeing some green, but HS Tech seems to be coming off some of the initial highs here this morning. This is Bloomberg. .29 a.m. in Tokyo. Japanese markets are going on a lunch break in just a moment, and we are just live outside the Bank of Japan here this morning. That decision could happen any moment now. So certainly, we're expecting no change when it comes to rates are concerned, but really it's going to be about the press briefing later on this afternoon with Ueda-san, given the turbulent week we've had with JGBs and whether they are going to be talking and addressing ways to stabilize not just the bond market, but also the currency as well.
Yeah, so decision should be out, I would say any time from now, any minute from now. Although that is to say, of course, this is typically within a range of between, I would say, 15 minutes from now, and then you just push forward maybe about an hour and a half. And, that old sort of adage where, the longer it takes for the BOJ to come out with a decision, chances are the higher the probability of maybe some tweak to the statement itself. Anyway, we'll if the statement drops, we will bring it to you immediately. Look at markets right now as we go into that lunch break, as Yvonne is pointing out. It's briefing to, here's a stat for you. The 30-day vol on JGBs, JGB futures specifically, is at a 6-month high, and I wonder how they will talk us through that. Added to that, to the latest comments coming out of the finance minister, that foreign investors don't really have a good understanding of the potential tweaks to the sales tax.
Yeah, we're all still trying to figure out.
Yeah, anyway.
But really what's driving the selling as well across JGBs. But yeah, we are set to get that BOJ rate decision soon. Let's bring in Taro Kimura, Bloomberg Economics Senior Japan Economist. He joins us now from Tokyo. Taro, always great to have you on BOJ Day. Before we get to the decision, there was, of course, an inflation report that came out here today. What's your take on the CPI report?
Well, yeah, quickly on CPI report, I think it slowed down in the headline, reflecting a higher year-earlier base from previous year's spike in fresh food, as well as the new Prime Minister Takaichi's measure to temper prices of gasoline. So that means the Bank of Japan, at least temporarily, has a breathing room. They don't have to worry about prices are spiking and rallying, and they need to act immediately. That won't be the data suggests that won't be the case for the BOJ. So I think it's a good news for BOJ.
Yeah, Taro, interesting too, because this is coming at a time when yields are melting up, and I really want, if you could, talk about the research that you put out. We heard from the finance minister, a headline drop earlier on, the foreign investors don't really understand what's going on in any potential tweak to the sales tax. So I wonder, could you decompose for us this melt up in the 10-year yield? What do you think is the biggest driver there? Is it fiscal non-discipline, or is that just a better economy?
Exactly. Before talking about 10-year yields, I think what spooked the global market was ultra-long yields, like 40 years, 30 years, 20 years. Those are, for me, a theme market dysfunction rather than a crisis. So the BOJ and Ministry of Finance can deal with. And separately, from the ultra-long yields, yes, I agree that the 10-year yields are picking up, but I doubt it's mostly about so-called fiscal concerns, because, it's not about Japan's fiscal stability is in doubt. The corporate profits are good, thus the corporate income tax is expected to increase. Japan's economy consumptions are picking up, and also don't forget the Bank of Japan will start to sell its ETF holdings, and 95% of the capital gain is going as a government revenue. So as long as it's like Takaichi announces a 2-year temporarily sales tax cuts on food, I think the Japan's budget is sustainable, and I think the recent calamity in the JGB market suggests the markets are sort of agreeing on that side. And what's driving actually is, for me as an economist, it's a healthy momentum in Japan's economy. Remember that Japan used to have only zero inflation. Now it's over 2% or near 3%. That means stronger, at least nominal growth and nominal higher inflation expectation. And 10-year yields, it's just around 2.3, 2.2% with the inflation over, in the economy with the inflation over 2%. Is that really high? I don't think so. I think there's still an upside in JGB 10-year yields, but I think it reflects a positive momentum in Japan's economy.
So, Taro, do you think the BOJ is behind the curve then? That's the big question. And what are you expecting out of this meeting today?
Yeah, I think the BOJ has been dovish for over a year, and they hiked rates, but only gradually and slowly. But the prices didn't overshoot to 5% or 10% or something. The learning from it is inflation is actually taking hold in Japan, but the experience of decades-long deflation and disinflation suggests it's really hard for Japan's inflation expectation to spike easily. I think that's a tailwind for the Bank of Japan. So I don't think the Bank of Japan isn't really concerned about becoming a behind curve of the prices. And I think what the BOJ is going to do is leave the dovish tone as the government wants. And then market may react with selling the yen and selling the JGBs, and the government cannot get tolerant, and then the BOJ can do a next rate hike. So I don't think they're concerned about the recent inflation momentum are too strong. So I think the WIDA will just strike a neutral or even a modestly dovish tone in this press conference today.
Taro, thank you so much. We'll let you get back to the desk in case that breaks anytime. Taro Kimura, there, a senior Japan economist out of Tokyo for us with that imminent decision coming through out of the Bank of Japan. Joining us now from Singapore is Francis Cheung, head of FX and Rates Strategy at OCBC Bank. Francis, thank you so much, and Happy New Year's. First time we're speaking in 2026. Let's start with the BOJ. Your expectations there, and what do I need to be paying attention to?
Yeah, the market is instead actually looking for any hawkish signals that will be coming out from the BOJ, and that could come on a few fronts, including the updated economic forecast, the expectations about wage growth, and also, of course, the rhetoric on the weak yen. So the BOJ is widely expected to upgrade their economic forecast, but still, any revision that is beyond 0.2 percentage point may be seen as optimistic and therefore hawkish. Regarding wage growth, the BOJ has already been expecting another solid year of wage growth. However, it is a matter of whether they would need to wait for the first cut of the Shunto result before they take the next policy action. The Shunto result might be coming out from sometime in March, but potentially even after the March MPC meeting. So that may explain why market does not really see meaningful chance of a hike before April meeting. However, again, if any commentaries on higher conviction of wage growth, that could mean the BOJ can actually hike earlier than market currently priced in. And lastly, of course, on the weak yen, the implication of the weak yen on inflation for Japan, that is already evident if you look at the import price index. So there are two indexes. One is yen basis, the other is contract currency basis. So there has been a divergence already over the past few months. So again, if the rhetoric is heightened on that front, that might also mean more hawkish than expected BOJ.
Okay, more hawkish than expected BOJ potentially. Okay, there's a lot of talk about 160 for dollar yen now. Do you think that's still the line in the sand for the Bank of Japan and the finance ministry?
Yeah, indeed, the near-term range 155, 160, while the top side 160 still hold. It is because of the expectation or the risk of FX intervention. So we think 160 would still hold for now. And going forward now, because the uncertainty is still quite high and investor might still be a bit defensive. But ultimately, if you look at the JGB Treasury yield differential, and even including 100% FX hedge, if you do asset swap into JGBs, that is starting to look appealing. Of course, the given is that the market has to stabilize. So further out, we think the yen would ultimately benefit from the yield differentials. But that said, for now, market sentiment is a bit unfavorable, I would say.
Do you think that environment changes over the next 6 months?
Yep. So we have to let the dust settle. So after election, the accompanied confirmation or implementation of any additional fiscal measures. So by that time, probably, yes, we would need to wait until May or June for the market to stabilize. However, for some investors, if they are looking at the pickup at JGB, if they have the appetite, so we cannot rule out that there would be some investor interest already starting to the super long end. But base case on balance, we would expect investors to still prefer to avoid duration and keep any JGB positions at 10-year, tenors or below.
So do you think that you still want to hear more? I mean, we've heard from a bit from the finance minister this week about, there's nothing to see here, don't calm down. What more do you want to see from policymakers, and what signals need to be made to really kind of stabilize the JGB market and support the currency now, Francis?
We are not actually expecting too much. So regarding MOF and BOJ, right? So first on the MOF side, according to the initial budget for this year, of course, that budget might already be subject to change. But according to that, the supply of 40-year JGB is already very small. So they have already further reduced the supply, and it's actually constitute a very tiny portion of the overall gross issuance. So bad and good, right? So good means that the supply is not really coming through, but bad is that the room for further reduction is actually very limited. As for the BOJ, will they come to the rescue? The bar has always been quite high for the BOJ to increase the JGB purchases with the view to supporting the market. So they has come a long way to come up with their QT plan, and they have been sticking with that. And our base case is that they would continue to stick with this so-called step-up QT pace, that kind of plan. And they're not due for interim review yet. The best that they can do might be within the current QT band. Of course, they can tweak the tenor allocations towards more super long end bonds. But if they stick with the QT pace, that means that they have to further reduce the purchases of other tenors. So the likelihood of that happening still doesn't really seem high at the moment.
Okay, just to pivot to the Chinese currency, which today was the first fix in let's call it over 2 years. Below the 7 handle, I know it makes of a good news headline, but is there any significance beyond just a nice headline to write here, Francis?
Yeah, the approach, I would say, is pretty much the same, that the authorities seems to be comfortable allowing for some gradual renminbi appreciation. So it's a matter of the pace, because 7 is a psychological level. So despite actually PBOC comments yesterday about the yuan overshooting, the fixing today further boost the renminbi sentiment and push dollar CNH lower. And as a background, the latest FX settlement data from China for December had already shown that the onshore willingness to convert foreign currency receipt into renminbi has risen to almost 69%, which is the high end of the range. So if this positive feedback loop continue, then we cannot rule out that this conversion ratio would stay high, and onshore might also be a bit tempted to convert some of the FX deposits into renminbi. But if that happens, that means the pace of the renminbi appreciation would quicken a bit. Then the policymakers may again come in to try to smooth the movement. So the bottom line is that they would be willing to allow for some measured pace of renminbi appreciation, especially given an overall soft dollar outlook.
Okay, real quickly, what's your forecast for yen and for renminbi moving forward here?
Okay, one step at a time. Yes, as we mentioned, we expect ultimately the yen would benefit. But let's look at if this 155, 160 hold first. So if it ultimately on a multi-month horizon break below 155, we would be looking at the next target at 150. For renminbi year end, we are looking at 692.
Okay. Great. Francis, thank you. Francis Cheung, the head of FX and rate strategy at OCBC. And of course, we're set to get that BOJ rate decision anytime soon. We're on tenterhooks, of course. If you're a subscriber, you can turn to the terminal for more on this. T-Live Go is your function for the latest updates, commentary, and analysis from our expert editors. This is Bloomberg.
looks like we have the concept of it. It gets everything we wanted, including especially real national security.
President Trump was the one who reinvigorated NATO at the summit in The Hague with the famous 5%. I think we can be thankful for the fact that he again has been able to take leadership on this issue. How can we collectively protect the Arctic?
On Arctic sovereignty, we stand firmly with Greenland and Denmark and fully support their unique right to determine Greenland's future.
The process of getting to that agreement has clearly damaged trust amongst allies, long-standing allies with deep friendship and partnership. That's been the very unsettling thing about the last few days.
I think that what's going on is really a change of the world order.
Every country is entitled to defend its legitimate rights and interests.
We consider the people of the United States not just our allies, but our friends.
All right, world leaders in Davos weighing in on, of course, everything from Arctic security and shifting alliances in the transatlantic relations. And as we saw those live pictures of President Trump arriving back in the U.S. After what was a pretty interesting Davos, to say the least there. We also heard from NATO Secretary General Mark Rutte saying that a breakthrough with President Trump over Greenland was secured without discussing the territory's sovereignty.
Yeah, speaking to us at Davos, he said that the talks focused on the broader issue of security in the Arctic.
President Trump has been clear from when he was in office, Trump 45, also when he came back into office, Trump 47, that when it comes to the protection of the Arctic, with a priority on Greenland, we have to spend more energy, more time, more focus on this, because we know the sea lanes are opening up. The Chinese and the Russians are more and more active. So what we discussed last night, how in a practical sense we can get this done. And we agreed on these two tracks. One is the 7 countries in the high north, including the United States, working together to protect against any adversary. So that will be something where NATO is heavily involved. And then when it comes to Greenland specifically, continuing the discussions they started last week. The Danish delegation, Secretary Rubio, Vice President Vance in Washington, to continue that discussion. Also to make sure that when it comes to Greenland specifically, their economy, their military situation, Russia and China will never get access.
And the Danes and sovereignty, is that all assured?
We didn't discuss at all about that issue. So we discussed how can we protect Greenland, how can we protect the wider Arctic region. And again, I think President Trump was the one who reinvigorated NATO at the summit in The Hague with the famous 5%. I think we can be thankful for the fact that he again has been able to take leadership on this issue. How can we collectively protect the Arctic?
The latest rumours out there that it will be involve sort of bigger bases, longer leases, but not actually changing sovereignty, and the idea of far more American troops. Is that the sort of basis of it?
We didn't go into those details at all. We know that the Danes are completely open to having more American presence in Greenland, and Greenland is open to that. And I think it is good that these discussions take place with the 3 of them, because at the end I cannot negotiate on behalf of anyone. I was listening to a lot of people. I think there is a landing ground here, but in the end, of course, now we have to make it happen.
There we go. That was the Secretary General of NATO with our Editor-in-Chief, John Micklethwaite, there at Davos. Right. We're about just over an hour into the cash market session, an hour and 20, and we're looking at small caps. This has really been where the action has been. In fact, just a rotation today between, if you look at the 3, the Chinex, the Star 50 in Shanghai, and today, it's really been, see the action, it's really in the Beijing 50 benchmark, up about 2.2% here.
Yep, so continue to see small caps catching a bid. And yeah, I think when it comes to some of these small caps, 2021 highs for some of these benchmarks as well.
The second one.
The Star 50, yeah. All right, this is Bloomberg. Well, the CEO of Europe's only large language model player says that believing China is behind in AI is a fairy tale. Speaking to Bloomberg in Davos, Mistral AI's Arthur Mensch also told us geopolitics are pushing global companies to diversify their providers.
It certainly is a growing topic, top of mind in the CEO's mind of enterprises, that their dependency to single providers when it comes to digital services might become a problem and is not a great answer to the volatility that we observe in the world.
Yeah.
So it's true in Europe, but it's also true outside of Europe. It's true in the US with certain accounts. It's true in Canada. It's true in the Southeast Asian region where we operate a lot as well. So we do see that the technology we've built and the differentiation of it, which is AI that you can customize and deploy wherever you want, is something that does resonate with the geopolitical events that we see.
Well, staying with the geopolitics, one of my colleagues spoke to the Anthropic CEO earlier this week, and on China, he thought that the idea of sending advanced chips there, and this is a quote, is crazy, and said it's a bit like selling nuclear weapons to North Korea. What's your view?
Well, I think I don't think this is true. It turns out that China does very well without NVIDIA chips. We've seen China rise on the open source front, and we have been at Mistral basically the spearhead of open source in the West, so outside of China.
Is China behind, though, the West?
China is not behind the West. I think this is a fairy tale. In AI, they are very much at parity. And the year ahead is going to be extremely interesting in that respect. We care about Europe maintaining its position, Europe maintaining its ability to train models, because we don't think that we should rely on open source Chinese models in very critical applications. So we need to be able to create our own models and to sell them to enterprises. So it's going to be very interesting, but it's a fairy tale that China is behind.
Let's talk about your own business. Do you have a revenue goal for this year?
Yeah, we do. We should cross $1 billion by the end of the year.
Okay, and in terms of capex spending, what are you factoring in?
We are about to do around $1 billion in capex spending this year on our Endeavor Mistral Compute, which is what we've done last year is to start and build our clusters and to fill some of the data centers we're renting with these clusters. The idea being that because we have the hardware, with the software platform, because we know how to build the models and the applications on top, combining them with the GPUs is a way to get to a vertically integrated stack, AI cloud services that are competing with some of the other fully integrated providers.
There we go. Jemana there with Mistral AI CEO Arthur Mensch at Davos. Right. Just look at markets right now. So a couple of things, and it's we're wrapping up a week, but gold remains very much in focus. In fact, as we march toward, if just a few months ago, if anyone told you that 5,000 would be the next headline we'd need to ride, they'd call you crazy. But you know what? We're close to that. In fact, when you look at silver separately, 100, someone told you when we were at 60, 100 would be where we are right now. That's the reality of things. As you can see, gold names bid substantially. China Pharma is also in focus today, coming up on your screens very, very shortly. And then we'll talk about PopMart and, of course, BOJ. There we go on your screens after this development plan. And PopMart, that's in about just over an hour from now.
Yeah, so there's an interview that the CEO wanting to be doing on Xinhua. So that was telegraphed on social media. So a lot of anticipation of what he could say. Obviously, the Labubu outlook. What are the next IPs to watch out there as well? And of course, we're just moments away from that BOJ decision as well. Japan assets are looking like this here this morning.